Hello there.
Hi, how can I help you today?
Yeah. So, what is the Fed rate cuts and how it impact on Indian market today?
The Federal Reserve, often known as the Fed, sets key interest rates in the United States, which influence economic activity and inflation. When the Fed raises rates, borrowing becomes more expensive, which can slow down spending and investment. Conversely, lowering rates tends to stimulate the economy. For the Indian market, changes in the Fed's rates can have significant impacts. For example, if the Fed raises rates, it might lead to a stronger US dollar, making Indian exports more expensive and potentially reducing their competitiveness abroad. It can also affect foreign investment flows, as higher US rates might attract more investment into dollar-denominated assets. This can lead to capital outflows from India, affecting the value of the rupee and potentially increasing borrowing costs in India. So the interplay between the US and Indian economies is quite complex, and movements in the Fed's rates are closely watched by investors and policymakers in India. You're welcome. If you have any more questions about the economy
What
or
are
anything else, feel free to ask.
what are the sector that most impacted sectors in Indian market?
The sectors most affected in the Indian market by changes in the Federal Reserve's interest rates typically include financial services. Banks and financial institutions are directly impacted by changes in interest rates, as their lending and borrowing costs fluctuate. Export-oriented industries. Sectors like information technology and pharmaceuticals can be affected by the exchange rate fluctuations that result from changes in the US dollar's value. Automobiles and consumer goods. These sectors can be influenced by decreased consumer spending if borrowing costs rise. Real estate. Higher interest rates can increase mortgage rates, potentially cooling down the real estate market. These sectors closely monitor changes in the Fed's rates to adjust their strategies and investments accordingly.
Okay, totally. So, how it impact positively or negatively on Indian market?
The impact of the Federal Reserve's rate changes on the Indian market can be both positive and negative. Positive impacts. Attracting investments. If the Fed maintains lower rates, global investors might seek higher returns from emerging markets like India, boosting foreign investment. Export competitiveness. A weaker dollar can make Indian exports cheaper and more competitive globally. Negative impacts. Capital outflows. If the Fed raises rates, the US dollar could strengthen, leading to capital outflows from emerging markets, including India, and increasing borrowing costs. Higher import costs. A stronger dollar can increase the cost of imports for India, potentially leading to inflation. Overall, the net impact depends on how these factors balance out in the global and domestic economic context.
Thanks.
You're welcome. If you have any more questions or need assistance with anything else, feel free to ask.